Hello traders, today is the 16th of April 2013 and the time in London is 6 minutes past 1 p.m. in New York, 6 minutes past 8 a.m. Happy trading to you all. The title of this video is live Forex trading using the wave principle. Alright, we are now on a 1 minute chart and we have counted 5 waves. Okay, the first wave from here to this level here, and the second wave from here down to this level here, and the third wave from here up to this level here, and the fourth wave from here down to this level here, and the fifth wave from here up to this level here. Okay, this is the end of the fifth wave. Now we are seeing what we call a flat correction taking place here. You can see that the price went down a bit. Okay, in this 1 second please. The price went down from here to this level here, a kind of A corrective wave, followed by the B corrective wave. The B corrective wave very often is a 3 wave, okay, divided into ABC, okay. So from here all the way up here, that's the B corrective wave. From here to this level here, that's the A corrective wave. The A corrective wave is usually divided into 5 waves. Okay, I'm going to color it now into pink. That's the A corrective wave. The B corrective wave has been divided into A, B, C, bringing the price above, okay, the fifth wave. Now, there is something I need to mention to traders here. Very often, when trader counts, okay, 1, 2, 3, 4, 5 wave in an uptrend, they will sell. These are ordinary, okay, traders. They will sell straight away. Sometimes they will get it right, which means the price will go down straight away and they will get paid. Sometimes the price will go down a little bit, as it did here, forming the A corrective wave, only to go back above the fifth wave. Why? Because the smart money, if the smart money wants to buy, the smart money want to buy, okay, at the lowest price. But if the smart money want to sell, they want to sell at the highest price. Sometimes you may count a 5 wave on one time frame. That 5 wave may form only, maybe only one single wave on a higher degree, on a higher time frames. So you count 5 wave is to be now, one should be curious, go to a higher time frame to verify what is taking place. The higher time frame commands the lower time frames. This is what we call market stable data. Using the Elliott wave together with the market stable data, that's the best way forward. All right. So sometimes an ordinary trader will start selling like a crazy overbought stochastic traders. Stochastic is overbought, RSI is overbought, CC is overbought. This trader will sell. The same thing some of the Elliott wave traders are doing. They count 5 waves in the uptrend, they will sell, or they will okay, buy a put option. All right, or sometimes they count 1, 2, 3, 4, 5 waves in the downtrend. They will go and buy a call option, or they will buy and hold. This is the same mistake that overbought and oversold traders are doing, that these Elliott wave traders are doing. When we count 5 waves, the market is considered as overbought, but does not mean sell until you receive a sell signal, or until the price display at least the first lower high. If the price goes back above the first lower high, it means that the music has changed. So, well, you may decide to adjust or control the risk or come out altogether. Very simple, okay? So now we have a flat correction taking place. There is a high chance, okay, that the price may come down at least to this level, right? Okay, we come down at least to this level. So I was selling the euro. I will sell the euro now at 13128 myself. Okay, 13128. All right, placing my stop loss just to 8. I'll give it okay, 15 pips. Okay, all right. So my stop loss will be at this level here, 43, 13143. Okay. Put in a turquoise line, that's my stop loss, 15 pips. Okay, all right. Now, this is trading the flat correction itself. It's a bit okay, tricky trade that I'm taking, but the risk is not too high, so it's not too bad. All right. So we counted 5 waves. So what do we need to do? We don't just sell or buy because we have counted 5 waves. We will go now, okay, to the higher time frame to do some verification. All right. So go to the 4-hour chart. In this case, I'm going to the 4-hour chart. I may go to higher time frame, but I'm stopping on the 4-hour chart, which I was looking at before. You can see that I highlight some key levels here. The price was first in a declining channel, bearish on the 4-hour chart. Then the price started going up. So on this 4-hour chart, some traders may say this is the first wave of a new bullish cycle. All right. But if you look carefully, there was some resistance here, which I highlight here. There was a resistance here. Pay attention to the red horizontal line. Resistance, resistance. Same zone again, resistance. Yesterday, resistance. Okay, resistance. And we came to the same zone again today. That's where, if you look carefully, the 5th wave has ended exactly around this red horizontal line before we have the A correction and the B correction, bringing the price to the turquoise line right here. Okay, all right. So we are in a resistance zone, all right, on the 4-hour chart at least. All right. So you see also the price was displaying higher lows, higher high, higher lows, higher high. Now looking carefully here, I'm going to zoom into it so you can see clearly on this 4-hour chart. Pay attention. So before the price was displaying higher lows, higher high, you see, suddenly the price, okay, is not giving us anymore. It went horizontal. The high, okay, equal high, equal high. So the market pattern has changed. You see, start going horizontal. Okay, so we may challenge, we may look for opportunity to sell. Now we need to be careful, because if there is a breakout and the price break above my stop loss, that will be a continuation, price going back up. But so far, there was a bearish channel, price out of the bearish channel. Price was displaying high, lows, high, high. Now is consolidating, it's displaying equal high almost in this session. We have counted 5 waves on the 1-minute chart. That 5 waves is just one candle here, this candle here. Okay, the 5 waves that we have counted on the 1-minute chart is inside, okay, this candle here. All right. The A and B correction is the wick on top of this top candle, and this new 4-hour candle that is not yet completed. Going back again to the 1-minute chart, talking about okay, live Forex trading using the Elliott wave. We are back again on the 1-minute chart. Okay, so far so good. All right. So since we entered the trade, the price still okay, didn't come here. Okay, our stop loss. Okay. So we have counted 5 waves following our guideline. There was a consolidation on this 1-minute chart, then a breakout, bullish signature. Second wave should not cancel the first wave, all right, followed by the third wave. The third wave should not be the shortest wave, usually the longest wave, but not always, but should not be the shortest wave, followed by the 4th wave and the 5th wave. These 1, 2, 3, 4, 5 waves on this 1-minute chart is just one single candle on the 4-hour chart. All right, followed by A corrective wave, followed by A, B, C. This A, B, C is the B corrective wave of the flat correction. The pink line here, that's what we call the A corrective wave. The 1, 2, 3, that's what we call the B corrective wave, bringing the price above, all right, the top of the 5th wave. Why? Because ordinary traders start selling here. The small money does not want to sell there. As they were selling, the small money keep buying, forcing the price to go to the better resistance level. That's why it's very important to check the higher time frame. You count 5 wave, check whether you are at a resistance level. If you recognize a resistance level, check whether there is a better resistance above it sometime. If the small money want to sell at the best place, because they like to sell high always, they will sell high and they will buy low. So if the price is about to go down, the price must go up first. This is what's happening all the time. ordinary traders knew that the price is in the fifth wave, they start selling. The smart money say no, yes, or they say yes. We know we should sell, but we don't want to sell here. We want to sell at a low risk point or at a better resistance level. You see sometimes in the downtrend the same thing. It's going on all the time, and if you don't pay attention to it, you will not know what is taking place. All right. So we see now. So now the smart money bring it back up. Okay. You will verify the higher time frame, which resistance the fifth wave has ended at, and also you check above that if there is a better resistance level. It's all about value. Checking the economy news and using the trading triangle. One should not use the area way in the void. One must use the area way with the trading triangle, okay? And the market principle, very important. We are trading the price. We are using area wave to trade the price. Very important. The first thing that one must use is the market patterns. The market pattern control the area wave pattern. So you want to use any area wave pattern, you must align it with the market pattern first. The horizontal channel, the rising channel, and the declining channel. Try to understand why the price is doing what the price is doing. Understand also that there are distortions in the market. As I explained to traders before, on the first day of the week and the last day of the week, we are likely to see a lot of distortion due to portfolio adjustment. All right, traders return back to their desks after a long weekend. Traders go into a weekend because they want to close some trade, they want to protect their portfolio, they don't want to expose themselves to risk. We see a lot of distortions in the market. Sometimes traders get confused because they are counting wave. There are sometimes distortions, and traders will not acknowledge this distortion, and they will end up counting the wave wrong or forcing the area wave on the price itself. Distortion is happening all the time. Now we see more high frequency trading in the market, distorting the market on a 10-second time frame, on a 1-minute time frame. We are likely to see more distortion in the market, which will make the wave come more complicated to area wave traders. Only those who are using the common sense and trying to understand exactly what is taking place, why the price moved down, why the second wave has cancelled, the first wave. These are the questions. Why, for instance, all right, the fifth wave happens to be the longest wave. These are sometimes distortion taking place, messing up a bit the area wave theory, but it does not invalidate the area wave. It's just a distortion. All right. But you want to be able to understand the distortion and know what's taking place so you can make excellent decisions. It's not all about the excitement. It's about making excellent trading decisions and make real money. Okay? But if you are a new trader, you say, George, it's nice. Okay, I understand. Take it step by step. Don't force it. Don't rush. Don't try to impress anybody. And don't use area way like a science, like a magic wand, or try to just play it. And a lot of people have done in the past, and then at the end they are disappointed. Why? Because they try to use the area way like a science. It's not a science, okay? So, we said it now, okay? So, let's see how long we have been talking now about this. And we are speaking now 30 minutes about live Forex trading using area way. Okay, the price now, I'm out of this trade. You see, they take me out now. Okay, I'm 43. Okay, so I lost 15 pips in this trade. As the price challenge my stop loss, I will wait. If there is another signal, I will take it again. So that's what we are talking about. Okay, so we are here, and you see now. Okay, I enter the trade here. As I explained to you, it's a bit a risky trade, but I place my stop loss very close. Right here. Now I'm out of this trade, but I will re-enter the trade. If the price closes again below this level, I will sell it again. All right. Okay. You see now? All right. You see around now. You see. Okay. All right. So we want to align the area wave, with the market principle first. As you can see here, the price, what's happening now? Okay, so the price now display a new higher high, telling me that, George, the bullish momentum is back on, so there was this high here, Okay, now it went up, and because our stop loss was above the previous high, and it display a new high still there. We will watch it. Okay, paying attention to the clock. It's now 21 minutes past 1 p.m. in London. Usually, in exactly 9 minutes, we have a lot of important economy news being released in the market, and we will see how that will have an effect on the market, because I believe this move from here to here is what we are talking about all the time, a distortion. Okay, market reacting, and you see okay, coming back down again. So now what I'll do, I'll sell it again at 131.41. Okay, selling again. So in this case, 131.41, move my entry point there, and I will use exactly the same 15 pip stop loss, by bringing my stop loss at 131.56. Okay, now another thing that I need to do is that I consider this move. Okay, hold on please. This move, the last move that has taken me out from taking my 15 pip, you see now. So I consider this session as a distortion. Okay, so far. Okay, so far. Okay, so I'm going to put my spotlight on it. I will remove this spotlight. Okay. One second, please. I'm still here. All right, so that's it. So we see now the price display a new higher high, telling us that the bullish momentum is increasing. Now you see here, I enter the trade again after a return back below on the 1 minute charts, pressing my stop loss again here, 15 pip exactly here again, right here. Okay, so we want to see what's happening now. Okay, I consider this move that is taking place now as a distortion. In the meantime, I'm going to go now. Okay, pay attention. I'm going to go now to the Forex factory, and we're going to look together at some of the important news that I do shortly. Okay, www.forex factory. It's coming up. Okay, let's go back to that is okay. This is the euro, by the way. Okay, because very often when economy news is about to be released, sometimes the market will be moving up and down. So we want to watch it. Okay. So the guidance we want to see first a downtrend, price going down at least, and then a consolidation, a breakout, a pullback should not cancel the first wave, and then we see a continuation, and the price should be in a rising channel. Okay, that's what we want to do. For those who are using the TSTW24, for instance, if you recognize that the price is in a third wave, okay, on a daily chart, on a weekly chart, on a 4-hour chart, you should be busy, okay, taking a triple green signal. All right. So the price is in a third area wave. As a TSTW24 trader, so the setup is that the price in the third area wave. So that's your setup. For instance, this is your setup. Okay, price in the third area wave. You know that this is the third area wave. Suppose we are on a daily chart. Okay, so I know now that okay, we are now in the third area wave. What I will do, I may decide to go to the second best time frame. All right, this is for TSTW24 traders. Second best time frame, looking for okay a triple green signal on the second best time frame. When I see a triple green signal on the second best time frame, according to the rules of the TSTW24, I will not enter the trade on the second best time frame. I will go to the first best time frame. All entry for the TSTW24 is the first best time frame. So the setup for me in this case is just I recognize that the price is in the third area wave on the daily chart, or maybe another higher time frame, and then I switch to the second best time frame, looking for triple green signal, because the price in the uptrend in the third area wave, I want to focus on a bullish signal, a triple green signal, which are high probability trades, given by the TSTW24. Now, when I see a triple green on the second base time frame, I will not just place the trade because I see a triple green signal. You have to understand the setup is the one thing, and then the signal, and then the entry point. The higher time frame, the signal time frame, the setup, the signal, and the entry point. This is a top-down trading method. All right. Going back now to the Forex Factory. It's now ready. Today is the 16th, as you can see here, doing it live now. You see the green line here, a lot of economy news. I'm doing like this, so traders may know what's happening. All right, you see the manufacturing sale regarding Canada, foreign security purchase, Canada again, building permits, very volatile news. You see red envelopes here for United States, and core CPI, United States again. This housing start, very important news also for United States. And below that, this is due in the next 2 minutes. You want to check the time? It's in the next 2 minutes. It's nearly 28 minutes past 1 in London, in exactly 2 minutes. Or these 6 news will be released. Very important. And this news can change the dynamics, of the technical setup that we are looking at now. One of the mistakes that TST traders also are making is that a lot of Elliott wave traders are making, one of the mistakes that they're making, and they don't want to pay attention to the economy news. They don't want to use the trading triangle. They just want to use the technical alone. So for instance, if the news happen to be very bearish for the euro, and the price may come down very fast, all right, or if there are more good news, we need to be careful. All right, it doesn't mean that the price will definitely go up because you have a bullish news, or the price will go down because we have a bearish news. But we want to be aware of it. At least we know now that there are some important news. So I click on this, it's refreshing itself. And exactly, it's not ready yet because it's not yet 30 minutes past 1. In exactly 1 minute or so, I will come back again and click on it, and you will see the actual figures will show up here. These are the news that I do right now. All right. This is why we see to trade the gap periods. If you are a day trader, you want to understand what is the gap periods. Going back again to TC2000 that we are using. I've been taken out of the trade, as you see now. So if you are a new trader, you see now, for day trading, you learn something now, But the most important thing is how to manage the trade, All right. And also, as a day trader, you don't want to take too much risk. All right. So 10 pip, 15 pip, maximum 30 pip. That's my own trading style. So in exactly a few seconds, the economy news you see the market is now very quiet. Sometimes they may know the news, which means they will be pushing the price up. I consider this more a bit of distortion here, this section here. In fact, I'll leave this one here. I will highlight it with, I'll draw 2 lines to cross this section. The channel, the small channel here, I consider it as a distortion. I will color it, let's find a color that we can see on the chart. Green, I'll color it green. You see, they want to take me out again, all right? It's up to you. You can decide to come out or stay there. It's up to you, all right? Good. So the green section here, this is what I call a distortion. It's now 30 minutes past. Let's go back to the economy news. Boom. You see? Manufacturing sale, Canada bullish. Foreign security purchase, very bearish. It's red, you see? Very bearish for Canada. Building permits, United States, bearish. That may have it may have sometime a positive effect on the euro USD, which means the euro will be going up against the dollar. Sometimes the market may interpret it in a different way and say, yes, definitely will affect also the euro negatively, so they start selling. Core CPI also bearish. And look, this one, okay, the CPM monthly month also bearish. Dollar has been bearish. Only housing start, not too bad, bullish for the dollar. So it's a mixed sentiment here for the dollar, bearish and bullish. And Canada 17, okay, bullish and bearish. Now, this is why we are saying to traders that you are not, okay, trading economy news. You want to be aware of it. Now we see it, okay. So we go back now, keeping our eyes on the price itself. All right, but you don't want to trade the technical alone and forgetting the fundamental. That's what we are talking about. I want to check how long we have been talking now. Okay, nearly 25 minutes. My intention was that the video is below that, but okay. All right, let's put it here for a while and see. Wait. I see the reaction. Sometimes the market will be quite a bit before we see some reaction. I will not going to close my trade. All right. You see now, these are the decisions you will make, so I don't want to close it. Okay. So we can say that most of the important economy news, which means the market in fact was okay, expecting a bit of bearish news from the United States. So that's where they were quite bullish towards the Euro USD. So they were selling the dollar and buying the Euro. And in fact, the Euro USD was going up before the news is released. So I believe it's all already, okay, in the pudding, so to speak, all right, in the price. So we may see smart traders probably taking profit. As I show you now, I consider this move up here as a distortion, even though they take me out with 15 pips, I consider this session as a distortion. If it's truly a distortion, how do we know? If like I said, this is truly a distortion, the price must cancel it. There's a high chance that the price will come back down to the starting point of the distorted move, which is here. All right? You understand what I'm saying? I counted 5 waves, okay? I recognize, okay, A corrective wave followed by B corrective wave. I decided to sell aggressively here, though there was no clear-cut signal to sell as such. I decided to enter the trend to control the risk, the aggressive trade that I was taking. I made that decision consciously. I decided to use 15 pips, all right? The market was going down a bit. I may decide to take some profit, 8 pips. I did it. I don't want to. Prior return back up. I didn't move my stop loss. I didn't want to close the trade. I was taken out. Ouch. It was not very nice, okay? So now, price start rolling it down, okay? Goes below, okay? The previous, okay, stop loss level. I sold it straight away, all right? Place my stop loss right here now. That's my new stop loss, okay? I consider this move from here to here as a distortion. And I'm saying to you, if it's truly a distortion, the market has a high chance to rectify the distortion. How? By bringing the price down to the starting point of, okay, the distortion. So it's rolling it down. We will see whether it will bring it down to the starting point of the distortion. It's getting a bit too long now, ladies and gentlemen, okay? And I'm getting a bit also tired, all right? So now it's nearly 29 minutes we are recording this video. I hope you are learning something from it. I mean, this is the key point. To understand the Elliott wave, to know how to use it, okay, successfully, profitably. That's what we are talking about here. It's not about knowing in your head, so you know what is a flat correction, what is a zigzag, or what is a complex Elliott wave. We see sometimes traders like that, okay, but this is the first step. So you know in your heart, you know in your head. The next thing is to understand it by your heart. So with this is what we are talking about. This thing that I'm talking about here, distortion, this is understanding by the heart. Economy news will do. The market were reacting in a certain way. So the market was bullish before the news. So you can, what they were trying to do is say, all right, it was going up before. Let's carry on moving it up. If it happens to be bearish, we will sell. So suppose you are working for one of the big banks and you were bullish the whole day, so your stop loss will be somewhere low here, okay, or whatever you are using option, okay, you are still in the money, so you want the price to be going up because you have a bullish position open, okay. What you can do to protect your the trade that you are taking, you may hedge it by okay, selling another currency pair that is moving in the same direction like the Euro USD. For instance, you may decide to sell the Euro Pound, okay, which is here. You may decide to sell the Euro Pound, or you may decide to sell the Australian dollar, US dollar, or another currency pair that is positively correlated to the Euro USD. Or as you are pushing it up, you may decide to place sell orders below, okay, the previous high. All display, you may litter them with sell orders. So if, for instance, the price reacted very fast, bringing it down, okay, your sell order will be triggered and will be filled, and you will be in profit if the price running down very fast. Also, if you are using stop loss, you may move your stop loss, okay. If you were buying before and the news due, you may decide to secure your gain. So if they take you out, they don't take you out with losses. They are closing your trade for you profitably. All right. So we're just waiting for it to cancel the distortion, and that will confirm that okay, it's truly a distortion. If it's not truly a distortion, the price will change direction before it reaches the testing point of the distortion. All right. I don't know whether we should let it run like this or whether we should pause it now. Okay, what do you want us to do? Okay, pause it, or okay, we give it again 4 minutes. So at 35, if you couldn't cancel it completely, I'll pause it to avoid that this video happen to be a very long video. Okay, I don't want that. Okay, so keep watching the clock, and if we have 35 minutes and it didn't reach okay, the starting point of the distortion, we will pause the video and let the price carry on with what the price is doing, and we'll come back to this to see what's happening in this okay, Forex market. Okay. By the way, this video is for educational purposes only. It's neither solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. We are discussing live Forex trading using the wave principle. All right. Okay. You see now? So if you are day trading or you are trading, a lot of mistakes that traders are making, they go, all right, nothing wrong. You see now that I was taken out of the trade. It is one decision. But it's my decision whether I want to take profit. It was first in profit. Do I want to take it? No. Do I have to move my stop loss? I didn't move it. Now, I stick to my stop loss. I was taken out. Conscious decision made. Okay. It happened. All right. Next thing, I know what I'm looking at. Nothing has changed in my setup. I decided, okay, to sell again. Okay, here, my stop loss again there. Very often, when I'm day trading, I'll prefer to use 30 pips stop loss. I do not want to use straight away 30 pips, all right? Because of the time of the day, I use 15 pips. That's why I re-enter the trade straight away again, risking altogether 30 pips, all right? So, when we are using Elliott wave, this is something is changing in the market all the time, and what is changing is human beings. I want to check the clock because okay, 60 second more, and then we're going to pause the video. Okay, because if you couldn't reach it, we have to pause the video. Okay, so human beings are changing all the time. Why are they changing? They are changing their mind. They're changing their mind because they fear something, they are afraid, or they become greedy. The sentiment. So this is changing all the time. So though we are using technical trading tool, we shouldn't forget that the center of the market is human beings, and a human being can be influenced by many okay factors. And one of the factors is the economy news. Like you see now it's bearish. Suppose, all right, for instance, you were buying the dollar. Okay, you were buying the dollar before. You see this red. You may be thinking, all right, if you have too many bullish position towards the dollar, if you have some of them profitable, what are you going to do? You will close some of them. This is a reaction, action, a reaction. Human being reacting. We're going to post a video soon. So you close some of them and manage the trade. You say, I don't like this. Too many. Some bear will start coming out because of this economy news, and I don't want them to mess up my trade. So you close some of the trade and you take some profit, or you move some stop loss, or you secure some gain. By doing that, you are intervening in the market. You are placing orders in the market. All right. Whether you move stop loss, whether you secure your gain, whether you take profit, these are market orders. Okay. After that, you see that the market may change because of, if many traders are adjusting their portfolio because of the economy news, you may see that the pattern may change. Pausing the video now, and we'll continue with this discussion, okay, in the second part of the video. Okay, before I close the video, I'm going to move my highlight to the point where we stop it right there, and I want to check also the time in London, 42 minutes past 1. We have been speaking now nearly 36 minutes, okay, talking about Elliott wave and Forex. So pausing the video, and we will come back to it soon. Speak to you soon. Okay, traders, as you can see, all right, this was the distortion that we have highlighted. We paused the video where I left the green spotlight here. I will remove it now, and all right, and you can see now the price has cancelled the distortion. See, from here to here was the distortion which we have highlighted with the green channel, and now the price is slowly, it came back to the starting point of the distortion, confirming to me now that this is, okay, a distortion. Now, one of the challenge, I'll move my some of my line now. Okay, 1 second please, because we don't want to move the lines. Okay, so what I'm going to do now is to cover it. I'll try to cover my distortion. Okay, what I'll do, I'll cancel this one, and I'll put the new one on tick, because the distortion now confirmed. So as a disciplined Elliott wave trader, I want to cover my distortion, so I know that, okay, this is my the distortion is now, okay, rectified. So you can see this is the, you see the price went to this level. Shouldn't, for one reason, probably economy news and other things. Okay, people changing their mind. Price went up to this level. Now, this distortion now is now cancelled. Okay, it's cancelled. All right, we will expect the price to be below this line here. Okay, in fact, right now it's cancelled, which is great. Okay, that's a new starting point. Doesn't mean that the price will definitely come down, but at least it confirmed to us that this was a distortion. All right. Okay, now we want to watch the price itself, the number one indicator. Okay, and manage the trade. Okay. So far we are still in this trend. This is our entry point. This is our stop loss right here, 15 pips stop loss. The first time we tried to sell it, we sold it somewhere here. Price went down. We didn't take profit. We were taken out somewhere here. Okay, now we re-enter again. Okay, now we are still in this trade. I'm going to pause the video again, and before I go, I'll do exactly the same thing I did before. So remember, we are stopping the price cancel the distortion, which I highlighted now. Is now in the zone of this horizontal line. The price now 13132. I'm putting another spotlight there to highlight where we pause in the video, because I want to roll it now. Let's see how, okay, this, okay, all right, it's working. All right, so I'll pause it again, but before we go, we check the time again. The time in London is 7 minutes past 2 p.m. in New York, 7 minutes past 9, in exactly 23 minutes time. All right, okay, all right. Because I trade some time for rest to March, I don't pay attention to New York, and okay, we will come back to it. Okay. All right, pausing. Okay, the video. All right, after 39 minutes, we pause the video. Stop spotlight here. Okay, and we'll come back to it soon. Speak to you soon. Okay, traders, going back again. I'm on my YouTube channel doing some work. Okay. Going back to, you see, as we were looking at, you see we stop the video here, you see, right here, all right. So, but the price, after constantly confirming to us that this was a distortion, and it went down below, okay, this blue horizontal line. Try to retest it. Some trader come down and resell it again. So the movement, okay, is to the downside. So far we enter the trade at you see here, okay, this is our entry point right here. All right, now it's down here. We are the price now 13119. all right, not too bad, isn't it? Oh, gorgeous, isn't it? Yeah, beautiful. As I show you from the beginning of this video, we were going step by step, okay, because in every trade there are risks, and we don't want to force it. That's the key point. We don't want to force it. And if you count 5 wave on one time frame, that 5 wave, okay, can be a single, just one wave on a higher time frame, and the wave that we have counted on the 1 minute chart. In fact, it's just this candle here, this 4 hours candle here. That's why, because the price was consolidating here, and the move from here to the upper side of the consolidation zone was divided into 5 sub waves on the 1 minute chart. And the price is also at a resistance level. After displaying higher lows, higher high, the price, okay, was failing to display a new higher high, confirming to us there is a kind of a slowdown or a weakness in the bullish momentum. All right, see some traders coming up. These are high frequency, crazy traders. Okay, boom, boom, double bottom, buy. Okay, all sorts of things going on in this market. Okay, so far so good. So this trade was a successful trade for us. Not bad. I expected more from this trade if the market, because now New York is open. The time in London now is 37 minutes past 2. Let me double check first. 1 second, please. Sometime I'm trading Forex, and sometime I don't check other things. I want to check again the economy news carefully here. Okay, it's all right. At 9 a.m. and that's already gone. ECB president speaking now. Draghi, the ECB president speaking. Okay, all right. So we see now how we do it. So you want to check the economy news at the same time we are trading. We're paying attention to the price to know whether you want to remain in the trade or not. You want to take profit, all right? Blah 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 blah. I'll go back now to the 4-hour chart, ladies and gentlemen. As you can see, let's bring more data now. Okay, I want to remove my spotlight, too many spotlight on my chart. I'll remove some of them now. Okay, this one, goodbye. Okay, gone. All right. Trading Forex and using the Elliott wave principle, we have counted 5 waves. That 5 waves is just one candle on the 4-hour chart, as you have seen. We went to the higher time frame to verify what is happening, because we are using the market principle, the market pattern first, and aligning the Elliott wave patterns with the market patterns. If we fail to align the Elliott wave patterns with the market patterns, we are likely to make a lot of wrong decisions. So right now, if it's rolling it down because the price is in a consolidation mode, we have a consolidation pattern, which is a market pattern. All right, let's do it together before I close this video. To go a bit deeper into it, we will see that you see it's consolidating now. We shouldn't. I will remove. Okay, I don't need them anymore. Okay, you understand? Okay, so that's my I'll leave my stop loss there so you see. All right, so what's happening now is that the price consolidating, as you can see. So the levels that we need to watch is the median line of the consolidation. Okay, you want to watch it. Price going down, price looking for a better support level. If you return back above my entry point, that will put a question mark on the trade altogether. So if the music has changed, the dance must change. Very important. So you're rolling it down. First target must be the median line, break below the median line. Next target this level. Does not mean that the price will definitely come down here, but we know the strategies that we should apply here. If you find a support above the consolidation level, which means above my entry point, then okay, we may give up selling it, or maybe stay out, or join the bulls. But at this stage, okay, it will be better for the euro to pull back a bit, at least a bit. All right. So you see, market pattern first before, okay, Elliott wave count. Once we count the Elliott wave on one time frame, we want to check the higher time frame. 1, 2, 3, 4, 5. What's that 1, 2, 3, 4, 5? Okay. Are they some wave of a bigger wave? Are they minor cycle of a bigger cycle? Okay, what's happening? Is the market forming a pattern? Is the market forming a Fibonacci pattern? All right, you want to understand. And if you are using one, okay, trading, okay, strategy, do not forget everything else. Sometimes traders are applying the Fibonacci pattern and they forget Elliott wave. Sometimes they are using the Elliott wave pattern and they forget about the support and the simple trading method, trend line support, resistance, and managing the trade, which is the most important thing. As you have seen, the risk, the setup. In this case, what was the setup? Okay, the setup, we can say that it was only we can't find wave. But that's not a setup. The setup, in fact, is that the price failed to display a new higher high, okay, on the 4-hour chart. All right, there was a weakness. We see a weakness here. Now, on the 1-minute chart, we see also that the price, okay, has displayed 5 waves. And then there was a corrective move followed by B corrective move in that resistance zone. So the 4-hour was giving us the setup. The 1-minute chart was zooming into it to tell us what's happening right now. 5 wave plus a flat correction. Knowing the flat correction, we can use the flat correction also to make some decision. Very often, in the case of running a flat correction, you can see that the price has taken out the lowest point of the A corrective wave. So we will expect instead, okay, an expanded flat correction to the downside. Okay, so we'll expect more move to the downside. Now we see that it become a bit complicated to see all the wave on this 1-minute chart. How do you handle that? You go to another time frame, bit higher, either 2 minutes. All right, we can do this. In fact, I'll go to my favorite one. You know where I'm going, the 3-minute chart, and we can look carefully and see what's happening here. So on this 3-minute chart, we may say, "Oh, George, look again carefully on your chart, okay?" And you see my distortion still here, which the price has quickly. So in fact, you see. So when you see the distortion, you handle it, which I did nicely here. So we can say this portion here was not supposed to happen. All right. So you need to be aware of it. You need to understand that it's not supposed to be here, but maybe due to economic news, the smart money decided to kick it up a bit, or just to take more of these impatient Elliott wave traders that were selling on top of the 5th wave. Sometimes if you count the 5th wave, you may decide people to sell first and behave like a smart money. Sometimes which means you miss some opportunity, but you may be entering a trade like the smart money on top of the big corrective wave, which I did first time before this distortion take me out, and I'll rejoin it again. Once you are in the trade, you must manage the trade, okay, carefully. All right. I hope you have enjoyed this video also about the live Forex trading using the wave principle that you will put into use, okay, to make excellent, trading decisions. We have been talking now 48 minutes, talking about live Forex trading using the wave principle. Enjoy yourself and be very happy. I'll speak to you soon. Stopping the video.